Welcome back to our StockTwits Q&A forum. We're here answering your questions live. I'm joined by Evan Lazarus, filling in for Scott Redler. Laz, good to have you today.
Thanks for having me, and thank you to StockTwits for allowing us this forum. I appreciate it.
All right, well, let's just dive right on into the questions. We've got one from Dieter Trader who says, Laz, good to see you doing video today. I like the way you trade. How did you learn to trade and craft your style?
How did I learn to trade and how did I craft my style? That's a loaded question, but I'm going to give you my best answer. The long and the short of my journey as a trader is really quite simple. I got into this business very young, in a time and a period where a lot of people were making money. I was fortunate enough to have some success, not really understanding what I did for a living. I came in, I did the same thing every day, it worked every day, and then it stopped working. I realized at some point thereafter that I was an uneducated, not a sophisticated thinking individual. I was always chasing price. I was never anticipating movement. I really didn't know how to plan. I didn't have strategy. I didn't have technique. I didn't have style. And my options were really quite simple. Leave the business altogether, find something else to do, or figure out why things happen. Understand, the dynamic of why stocks go up and why stocks go down and why markets go up and down, and how to position myself accordingly so that I could, not be chasing, but the one, profiting. And it took a long time for me to really understand my business. And there are a lot of, subtleties and nuances that have happened to me along the way. And I was fortunate enough that I had the capital to stay in business and to stay solvent while I was essentially teaching myself. Time was my teacher. I had a lot of good resources. And I developed sort of an identity and a style over time. And that's really, what I live and die by as a trader, even today. I'm still learning, I'm still growing as a trader. That process never really stops. I still battle certain demons. I still go through the same psychological pitfalls that everybody else goes through, but I have an identity and I swear by that identity as a trader. And I think the best advice that I could give somebody who's on the more novice side is educate yourself. Learn about why things happen. If you're in a trade, whether you're long or short, and you don't understand why or what's happening, get out of that trade. And that was one of the pivotal things that I think that I did along my journey as a to evolve into the person I am today. I really have a method to my madness, and I now teach it all the time. We do a lot of education programs here, and I teach a lot of the things that I've learned the hard way. Everything I've learned about trading and my style, it's because I've gotten my butt kicked. I've learned the hard way. It's been a school of hard knocks, and it's been a very, very good and it's been a great journey, and to the point where now I'm comfortable and confident in teaching others how to see what I see and how to think, about the future without necessarily chasing.
Well, touching on that, on what you were just saying, we have a question from Mr. Uno asking, how did you develop into a technically sound trader?
Mr. Uno, technically sound. Well, I think technically sound means, the way I interpret that is risk. When I get into a trade, the only thing that I care about is risk. I am always thinking about, what's my potential loss here? Is that within my risk, parameters? Is that within my risk tolerances? I don't think about gains, I think about risk. And, if you ask me about being technically sound, as a technician, I think the misconception is that, being a technical analyst is about being right or wrong or being able to predict up or down. No, being a technical analyst is being a risk analyst. So what I do is I always think about my potential downside when I get into a trade. The first thing I do when I enter a trade, whether it's long or short, is I know exactly what my risk is and how much I potentially can lose and what the worst case scenario is, so that it's not about right or wrong. I'm probably right 65 to 70% of the time, which means I'm wrong 30 to 35% of the time in my trade. So those are the trades that matter most, because I got a risk. I'm always trying to think of, where my pockets of risk are the smallest. That to me is really what technically sound is, and there's ways to do that using various formulas, moving averages and pivots, and different types of setups and market conditions warrant different types of techniques. But that's how I would best answer that question, I guess.
Well, you are more of a macro technician, as Chart Girl NYC notes, and she asks, what are some macro trends you see in the S&P? Do you think we go lower before we go higher?
Well, I'm actually not a macro technician. I think just to clear up any misconception, maybe I look at things on all time frames. I'll look at large charts, over long periods of time, and I day trade. I'll do anything from trade a 5-minute chart to trade a weekly chart. I can sort of navigate that landscape. So I'm not necessarily just one thing, but What was the question?
What are the macro trends you see in the S&P? Do we go lower before we go higher?
Well, let's take a look at the S&P. We can pop it up here on the screen, and I'll kind of go through the macro landscape. When you say macro, we're going to look at a bigger picture. Here we have the S&Ps over a multi-year chart. We've made higher highs and higher lows since we bottomed here in early 2009. The market here definitely feeling a little bit of pressure, but the trend's still very much intact. We still have this higher high, higher low. When I say that, I can show you visually, pull back, you're making these higher highs, along the way. And your lows tend to be higher than the previous lows. So the trend, for that matter, is still structurally sound. But if you're looking at it on a smaller time frame, here on a daily chart, we've definitely lost a little bit of the luster here. We're sitting at highs. But to me, it looks like the market could be ready for a pullback. If we go out to a monthly chart, a little bit extended here, we could pull back, to this lower band, which could be somewhere around the 1200 mark in the S&Ps. That would probably catch a lot of traders off guard. We've had a nice run, since the latter part of 2011, a multi-month run. We could be ready for some sort of, extended pullback here.
Okay, well, speaking on that point, Casino Trader asks, is this a sell in May and go away type of market that we're seeing, and any trading adjustments that we should be making?
Well, look, sell in May and go away is an old Wall Street adage, and it's worked very, very well for many people for a very long time. So I'm not one to argue with that or tell you that sell in May and go away doesn't work, because if you are a believer in that process, where you do sell in the beginning of May and you do reinvest, at the beginning of November, I believe it is, statistically over the long haul, maybe the last 50, 60 years, you probably would have done very, very well with that investment strategy. Is this time different? I don't really know, and I don't really think like that. I think about what's the data telling me today. Today, I do think we are ready for a pullback. You're seeing some of the market leadership start to fizzle out. Banks really haven't performed. Apple, for the first time, which is really our benchmark, I think it's our biggest weighted S&P stock, starting to feel some pressure. You can see it more frequently now over the last couple of weeks. You start to see sellers really pound the pavement there. So I would be a little more cautious here, and it does fall into that, the beginning of May type of strategy. So, if it ain't broke, don't fix it.
Well, speaking of Apple, we've got a question from Trade the Setup, who asks, in this current sideways market, would it be prudent to fade gap ups at or near the open? Case in point, Apple.
Again, that question, it's not going to be, you can't really ask that question and get a blanket answer. It's a stock-specific, market-specific question. You have to look at the individual equity or the individual index you're trading, and make determinations about what that's doing. If we look at Apple as an example, and we look at, let's say, a daily chart, and I'm a big moving average guy, and I take these candlesticks away. Actually, let me make this very nice and neat here for you. A little trick that I tend to do. So what I'm doing here is I'm basically taking any sort of data away. You don't see any, candlesticks or bars or any, chart data. All you see are moving averages. You can see here that this is the 8 and the 21 EMA. Definitely have flattened out, and we've even crossed to the downside. We haven't seen this happen since basically December of 2011. So yes, something is changing here in terms of the way price is moving. So on that time frame, and again, as we work our way down and we do time frame analysis, hourly, 30-minute, even 13-minute, again, you're starting to see more bearish tones. When you see those time frames, all aligned to the downside, that's when gap ups are going to be faded. Case in point, today, as an example, you can see the gap up in Apple. Let me put my time just to kind of answer the question. We had a gap up today in Apple. This is a 15-minute chart. It was faded. Why was it faded? Why did this gap up fail? Well, it failed because, again, the bigger forces on the daily chart are starting to point down. So a lot of gap ups, when that happened, will start to crumble, yes.
Okay, well, speaking of corrections and pullbacks, we've got a question from Sork, giving it my best shot, SORC, asking, he wants to ask a technical question, how you recognize correction from reversal in an incipient phase?
Okay, how do I recognize correction from reversal?
Right.
Corrections, again, these are all sort of general rules. They're not hard and fast, and they vary from asset class to asset class potentially. But a correction is a very controlled pullback. So let me give you an example. We'll look at the S&Ps. Corrections generally will draw down off of a predominant trend. So let's say your trend is up. Our correction will be some sort of minor pullback, usually lasting, again, depending on what you're looking at, some sort of short duration, 3 to 5 days, or if you're looking at weekly charts, 3 to 5 weeks. That usually will pull back into a rising or declining average, and the trend will resume. If we look at the weekly chart here, which you haven't seen that many pullbacks, but here's an example of a correction. So you have a trend that develops, again, follow the mouse, and a 3-bar pullback on a weekly chart. The trend then resets, again, 3 to 5 bar pullback here, the trend resets, and so on and so forth. So corrections generally don't last very long, and they're very controlled, overlapping candlesticks, that type of thing, if we're getting into sort of the technical landscape. But you can differentiate between a controlled pullback and a reversal.
Okay, well, we've got a question from Statewide One who asks, if a stock breaks out on big volume, when do you enter? Intraday, next day? Can you show an example?
Okay. Again, not different strokes for different folks here on breakouts. And I'm going to show you an example of a breakout on better than average volume. Here's Lulu, and this is a stock that we've been trading on the virtual trading floor, and you can see a breakout here above resistance around 76. You can see the stock rising. I like to trade a breakout prior to a breakout. I like to get involved with the stock before it actually breaks out, and I then like to add into that position on the breakout with volume. So you can see here Lulu, caught into, this is what we call a catch play. It catches right here, a little pullback into these two averages, which have turned up. And you can see even on the next day, holding the 8-period MA, breaking out on heavy volume. So I generally don't like to chase stock. I'm never going to be the trader that buys it up here after it's broken out. I'll be the trader that buys it before the pullback, before the breakout, adds to it on the breakout itself when I see volume rise. And then again, if it warrants, I'd like to find some sort of 1 to 3 day pullback here, or some sort of sideways basing pattern, and get like a nice high level base here for then again some more extension in the days to come. So that's an example of how to sort of tackle that question. You never want to chase price. Even on a breakout, you never want to be a buyer here. You want to be a buyer either on a pullback into the average, into support, or on some sort of consolidation. You never chase price.
Okay, so what do you think could be the next bullish catalyst? We have a question from Inwood123 asking, there are lots of catalysts potentially, but what do you think is the next bullish catalyst? QE3, employment number, non-farm, Facebook IPO, what have you?
To be quite honest, I don't think about it. It's not that it's irrelevant. I don't know. Nobody knows. I can't take out the old crystal ball here and predict it. I'm a technician. I study the movement of price. That's really what I focus on, price and volume. Anything above and beyond that is just sort of chit-chat, stuff to talk about. I don't know about QE3. I can't really tell you how the Facebook IPO is going to be. I'll see it when I see it, and I'll be able to make rational decisions about risk based on what I see. Anything else, like I said, to me is, unfortunately, it's just chit-chat. Well,
there's a lot of chit-chat about LinkedIn earnings. Of course, they were just reported after the close. And Rontier, trying again, said that LinkedIn is up after the earnings report. So would you buy if it breaks out above IPO higher of 120?
Again, it's the same kind of question about breakouts. And I actually pulled up a LinkedIn chart here. This is real time. You can see post-earnings announcement, the stock closed around 105. And it looks like it's trading 120 on this earnings announcement. If we look at the daily, I'm not a buyer at 120. Again, here's 120, just to give you an example. Let's just assume the stock opens up here at 120 tomorrow, and it could open higher, it could open lower, who knows. I wouldn't be a buyer because essentially I'm chasing price. I want to be a buyer at or near my averages. You see these short-term averages, you see how they hold as support levels on pullbacks. This is where you want to look to get involved on the long side, not necessarily up here. So the answer to the question is quite simply no. I'm not a buyer at 120. I'm a buyer on a pullback. Okay, what about Zynga? Because I know you mentioned you don't really know what to predict for the Facebook IPO, but is Zynga still a good idea to hold long for a Facebook IPO? That question is from Daniel. Again, it's one of those fundamental questions. I'm not a fundamentalist. I'm not a research-driven trader. I'm a price-driven trader. So for me to make an assumption about what Zynga may do based on the Facebook IPO, yes, there's probably going to be a lot of talk about that. But what makes my decisions really about trades is what price tells me and what the charts tell me. And if we look at Zynga as an example, we just looked at LinkedIn, just a moment ago. Let's look at this one. It's almost the complete opposite. The market, for whatever reason, whether it's fundamentally driven or some other reason, does not like this stock. Generally the best gains for a company statistically are in the first 5 years post IPO. This is not what a good, healthy IPO looks like, in my opinion. There's no reason to try and catch a falling knife. Traders tried to buy it at 12. They tried to buy it at 11. They tried to buy it at 9. It's now trading 8.5. Even the last 2 days, we got a little 2-day bounce into these declining averages. And again, sellers coming right back in mass. I probably wouldn't be here, period.
All right. Well, we have one from Laveco asking, talk about price line and what you think about the stock seeing north of 800 after earnings.
Okay. It's a great question, Laveco. 800 is a stone's throw away here. 800 could be one day in this stock. This is a very high beta, momentum-driven name. The only thing that scares me about this stock is that it's had a massive run. If we look at price line over the last, here's a monthly or a weekly or some sort of, picture that gives you a long sample. This is a stock that's had a massive run. And what we've seen this earnings season is that a lot of these stocks that have had huge runs, Apple, Baidu, and some of these bigger, name stocks that have had huge runs have seen selling post earnings. Not all, but a vast majority. Flirting here with prior highs. Again, this is going to be one of those trades that I'm not going to participate in. If it's going to see north of 800 on earnings, it's going to do it after the earnings announcement, after the bell, after the market's closed. I'm not going to position myself here for that trade. If that trade does happen and we do gap up, north of 800, we'll have to reevaluate at that time and, sort of evaluate that landscape. But for me, right here, right now, yes, it's very strong. It acts very, very well, and very well could see north of 800. But I'm not a trader who generally takes things into earnings, so it's a trade that I'm going to sit out on.
Hold off on. Okay. All right. Well, let's take a look at Amazon. We've got a question from A3106 asking, why does Amazon trade at a PE of 188 and good old Apple stuck at a PE of 12?
That's the stock market. That's in essence what the stock market is. I mean, to try and rationalize everything, with just a PE is never going to be a methodology for successful money making. That's the reason I generally, again, I'm very much a believer in price and volume, because I don't have to think about those types of things. Those types of things, as much as they make you, question and say that doesn't make any sense, it's not supposed to make any sense. And the more you try and rationalize it or force it to make sense, it's going to hurt you potentially very, very much on the profitability side. So let's just kind of move the PE question to the side, because I'm not really the person who's best fit to answer that question. What I can answer is, what price tells me about either potential lower prices or higher prices going forward. I'll leave the PE question to the professional analysts and the professional research people who can have, a nice roundtable discussion about it, but I'm certainly not the person to do it.
All right, well, let's see if you can help out Inwood123, who's asking your thoughts on the best sectors to follow for market momentum. Banks, housing, semis, transports. What do you think?
Retail. Retail's been the best performing sector. It's held up the best with this market. It still continues to act well. As some of these companies report earnings, things will change on a company-specific level. But you look at the RTH, which is the retail ETF, just nice, trend intact. Like I said, very controlled 3-bar pullback. This is a weekly chart. Trend resumes, sitting at highs. I'm always cautious about buying new highs, but you can't argue with this. You have Lululemon, you have Nike, you have a handful of, just good quality retail names consistently making new highs and doing their own thing, and hasn't really fallen prey to some of the market volatility we've seen. And, even the volatility you see in some of the tech names, retail's held in very, very, very well. Banks to me are really not uptrending. Banks to me are a place I probably would stay away from. There's a lot of risk on the table there. And home builders, as of late, have been a very, very good performing sector. We can look at that real quick. Here's the XHB. You can see that nice move off the October lows, and again, acting very, very well. Possibly stalling out up here. Again, I probably would wait to see some sort of basing action or maybe a controlled pullback here before I step in to buy at highs. But those two sectors have actually been working very well.
All right, well, we're getting some follow-up questions on retail, so we're just going to take a quick break, and we're going to answer those right after this. Keep the questions coming, guys.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
We're back and we're answering your questions live. Before the break, we were just talking about retail and how Laz here says that it's one of the best sectors right now to follow for market momentum. So we've gotten some follow-up questions on that. So let's answer Market Picker, who's asking, Laz, with the RTH acting well as of late, what do you think of Kohl's? Will it break above the wedge-shaped pattern at $52 for a buy?
Okay, let's take a look at Kohl's here. That's a good question. You know, with every sector, regardless of the industry, retail or any other sector for that matter, there are always going to be haves and have-nots. There are going to be stocks that perform or outperform, and there's going to be stocks within that sector that lag. That's case in point with any sector anywhere. If we look at Kohl's and we sort of go back in time, let's look at a weekly chart. And Kohl's has been a staple for a long time for many. It's been a very strong stock for a long time. You know, there's really not much to say here. This is a weekly chart. You know, I would like to see Kohl's clear this, you know, area around 55, you know, in the upper 50s before I really get any real oomph to be here, for lack of a better word. There's just not much going on here. And with the market at highs and with other retail stocks performing significantly better, Lulu, Nike, Under Armour, I think this is probably a waste of capital. To put money to work here, you're really not putting money to work because it's not working for you. You want to look at stocks that are best of breed. Again, I just routed off a couple of names. So I would probably stay away from Kohl's because if it can't really get going here and now while the sector's performing and the sector's making new highs, it's probably not going to get going. And if the market does pull back or turn down or the sector has a drawdown, they're probably going to go after some of these weaker names first to sell off than they would, you know, the stronger performing ones. So focus on the strength, focus on things that are making new highs, higher highs and higher lows and higher highs and higher lows.
All right, we've got Daniel firing off a bunch of stocks at us. Let's tackle CMG first. He's asking, is it time to short?
Is it time to short? Again, it's a question of your time frames. Here's a daily of CMG. The answer to the question, quite simply, based on the way it looks right now, is yes. This is the type of scenario that, you know, sellers like to look for. You have a nice bear flag developing. You saw a big volume. Notice the volume spike down here on earnings, selling off, retracing a little bit. You could run probably a stop just above this prior pivot that just got put in, starting to break above this, you know, this little 5 or 6 day channel the stock's been in. Your moving averages, again, look at your 8 and your 21, have flattened out. Notice the trend that it's been in. Something has changed here with price. So yes, I think the waters are safe here for a trade to the downside.
Okay, and he's also asking about CRM, long or short?
CRM looks to me, this has been a very healthy sector. It looks good. I would probably not necessarily do anything here today. We'd like to see it break out above this 160, what's this, about 165 area on volume. We tried to today. Notice we rallied into that 165 area and tailed down. Volume coming up ever so slightly. That's really not what you want to see. So I'd probably be, I think it needs more time in this basing pattern that it's probably in before it sees higher prices. So hands off for right now.
All right, and another stock-specific question, one from HTL Chat, who's asking any advice to those caught holding at T2 levels in stocks like Google. He actually mentions a whole bunch of them, but let's start with Google.
T2.
T2 levels, tier 2 levels.
Okay. I mean, look, hard for me to give investment advice. I'm not an investment advisor. I'm a trader. I'm a technical analyst. But looking at this for what it is right now here today, I would tell you that if the stock really thrusts through 600 and stays below 600, it's probably going to go lower. It sold off on heavy volume post earnings. If it can get back above 620 again with that volume, that engine that I talked about on the morning call this morning, then it becomes a little bit more appetizing. But if you're looking at it for what it is right here, right now, it's not a great looking stock. It's not a great looking chart, and it does signal lower prices potentially to come. Obviously, if the market holds in and the market makes new highs, and you start to see that exuberance come back, there'll be some upside in Google. But for right now, I'd be very, very careful.
It looks like HTL Chat was also caught holding at tier 2 in Baidu. So should he bail or watch for upturn signals?
I think it's a bail. I think you got to respect the fact that you saw some pretty significant breaks here on volume. This is Baidu. It's been a tough trade. I've tried to trade this a few times. Haven't really had much success with it. Broke this multi-month very tight channel pattern. Broke this trend line on volume. Now just basing down here. Probably waiting for these averages, which are now bearish, to catch up. And I would suspect that we're going to see lower prices here in the not too distant future. So again, unfortunately, you're caught in these, but you don't want to make a bad situation worse. As a trader, an investor, you have to live to fight another day. There's always going to be situations that catch you by surprise. Get out, reevaluate, live to fight another day.
And speaking of all these tier 2 levels, Art Funk Garfel, that's interesting, is thanking you for all you do and asking, is a tier 2 generally twice the size of a tier 1, or is the scaling exponential?
Well, it's not a the tiering system that we talk about is not static. It's not fixed. It varies depending on the trader. Some traders have different risk tolerance levels. Some traders have different capital-based structures. Not all traders are equal. By rule of thumb, if I'm trading, and the way I explain it to people, is that I generally try not to get more than 2 tiers. It's my initial entry, which is a small position that I'm comfortable with. It's not going to make me a lot. It's not going to cost me a lot. My add, which is my tier 2, I then get to a level where I am at a certain percentage of my capital base. And that varies depending on the trader. But at the second tier, I'm generally a lot heavier. It can be a double in position. It can actually, even for me, be a triple in position, depending on the specific trade and what the stock is doing. So it's not a fixed system. It's something you have to figure out for yourself. But again, I generally try not to risk more than 2% on any trade.
All right. Eric is asking, what defines a scalp trade?
A scalp trade is a short-term momentum trade. It's a cash flow trade. We talk about scalping intraday. It's really more of an intraday day trade. That's how I have always referred to it, and that's how I teach it. We generally talk about scalp trades off of execution time frames. Execution time frames are 5-minute charts, 3-minute charts, shorter pockets of data where you can nimbly get in and nimbly get out within a relatively small window of time.
All right, and we have another stock-specific question from Active Investor asking about United States natural gas. He's asking, at what point would you expect to see consolidation on the recent movement that we've seen? UNG.
Yeah, no, I know. With with nat gas, and again, we can look at UNG, it's a disaster. It's been a disaster. I know traders that have stepped into this trade trying to bottom pick this whole move down. I've generally avoided it, this entire move down. There's really nothing here that tells me that you want to be involved with it. Bottom picking is a really, really bad way to trade. Even, for every one time you figure out and you get a bottom, you get lucky and you catch a bottom, the next 9 times you do it, they're going to be so unprofitable that the one time you do it and it works, it's not going to matter. It's at best, bottom picking is a zero-sum game. So I would say with natural gas, it's best to probably just steer clear of it. If something changes, the daily charts are going to go bullish. It's going to have a much better setup. If you were inclined to get involved with it today, obviously you can use this low, this $14 as a stop loss. I probably wouldn't really even want to see it get back below, the $15 mark in here, if it's going to have any upside whatsoever. But again, this is not a trade that I would recommend for anybody on any level here and now.
All right. Well, what would your insight be on SLV right now, silver?
Commodities, tough trade. We look at the daily chart of silver. This is the ETF, the SLV. Again, your averages are pointing down. Trying to create some sort of support, I think, in here around the $29 mark. You can see these bottoming tail here, a little bit of a tail here. We could see a little bit of a snapback, but it's not a great trade. There's really not a whole lot of reason to be here, to put a lot of capital to work here. This is not something that's really working for you. Gold and silver, again, just sort of the two bigger precious metals that people look at. They really haven't been in play. We look at the GLD since March, a lot of back and forth. I know a lot of traders trying to jockey for position for long, for short, and in net, it's really not going anywhere. I don't think there's a reason to be here. I think, when it comes to trading, trade when stocks are making higher highs and lower highs and higher highs and lower highs. These instruments right now are not really doing anything that's good for anybody on any level, bears or bulls. I just think it's best to probably steer clear of them.
Really? Okay, well, just real quick, a follow-up on GLD. Market Picker just sent in a question saying, have you been frustrated buying the GLD? Just yet another false breakout, he says. Any implications for the overall market that you see there?
No, I don't necessarily. I'm not going to read it. I'm not going to read here and try and make some sort of opinion about how gold impacts the market. The market's going to do what the market's going to do. Gold's going to do what gold's going to do. They are separate items. As much as people like to correlate them, gold saw pretty heavy selling, from 175 in late February, early March, trading around 160. It's been languishing here for, weeks and weeks and weeks. If we look at a weekly chart and we go, up a time frame, under the averages, starting to tail down under the 21. This to me looks like it wants lower if I'm sort of just putting out my 2 cents. And I wouldn't be a buyer of either gold or silver right here, right now. We have, again, just that concept of lower highs and you have a high, you have lower highs. This could make a lower low here. So I just don't see a reason to be here.
All right, well, we're getting another one from HTL Chat asking about Akamai Technologies, AKAM, asking, is it time to bail here or should we just keep watching for upturn signals here as well?
Well, again, it's hard to answer specific questions. I don't know where traders are long from. As far as
tier 2 level.
As far as bailing goes, again, this is a weekly chart, so I'm giving you a larger snapshot of price data here. Big sell-off here. Look at the volume, right? That supports the sell-off. You could see a little bit of a snapback. I probably would be unwinding this position. It to me looks like, we put in this little bit of a double top here at that, just under $40 mark. We made a high. We pulled back. We retested that high. And we failed very hard with volume, volume to commit behind that move. This to me, you could see it, like I said, a short-term, consolidation here, but we could see back again. Next level support's not really down to that, mid 25 level. I'd probably be out of this trade.
All right. Well, WST Junkie's looking to learn a little something extra from you, saying, T3 Live and your philosophy on the markets is outside the box. Do you have any plans in the pipeline for T3 Live to launch educational seminars or anything like that?
Educational seminars. We do educational seminars today. I personally teach the Active Trader course. I actually think I have the book here. This is sort of my Bible, and this is basically, and again, goes back to the question that somebody asked earlier in the broadcast about my evolution. That book sort of encompasses everything that I do, everything that I know, everything that my team, has assembled over our years of getting our butts kicked, so that we can, and actually now do it and teach it and, sort of put our money where our mouth is. So the educational seminars and products are there, and I would say, go to the home page and click on education, and you'll kind of get a very good overview of what we do and how we do it.
All right, sneak in one last stock-specific question in from Market Picker, asking, with the Dow leading, do you think IBM could have higher prices in the near future?
IBM is a stock that I've been trying to trade a little bit. IBM on the weekly here looks good. Again, very controlled pullback. Notice again on the weekly, 3-bar pullback into a rising average where you see buyers step back in. This is textbook again for that, the question earlier about reversals versus pullbacks. This is exactly what I'm talking about. Very controlled, methodical pullbacks into rising averages. This defines a trend. Notice on the weekly here, we've had our uptrending averages for almost 2.5 years at this point. The stock's a little long in the tooth here. We look at the daily chart. Really needs to get above prior highs, 210. I'd like to see it really get above this, prior high pivot with some volume surge behind it. Again, volume is key. Volume is the commitment. Right now, sitting at highs, this could turn down and, retrace. This could break out. I think you just need a little more time here.
All right, well, Dieter Trader really wants you to dive into the numbers with this question. I don't know if you're ready.
Okay.
Score prediction for Flyers-Devils game tonight.
Flyers 4, Devils 2.
All right.
Go Fly, boys.
There you go. There you have it. We'll see if you're right. And guys, keep sending in those questions. We'll be back next week to tackle them again. Thank you so much. Have a great night.